Okay, we're back. Now, the first thing I had you do prior to learning the second accounting assumption is do your best to interpret this financial statement. Now, this financial statement actually belongs to Nike, and in case you didn't guess it correctly, the language that you're reading is German. Now, I'm going to assume that the majority of you guys don't know how to read German. I didn't expect you to. That's okay. And you probably had no clue how well this business was doing. Why? Because you don't know how to read the German language. So this is directly related to the second assumption we're going to learn, which is called monetary unit. All right, let's go ahead and take a look. Second unit, monetary unit assumption. Again, the answer is kind of in the name. Monetary sounds like money, so this assumption is going to deal about money. Back to external users. Again, the whole purpose of these assumptions is to make sure these external users, banks, government, investors, customers, etc., can rely on the information that they see. Monetary unit. When external users read financial statements, the financial figures shown are reported in the currency of the country that this business operates in. Okay, so if the business operates in the United States, when you and I view their financial statements, we're going to read it based on the United States dollar, not the monetary unit that businesses in German would use. Why? Because we understand the dollar. 2. When reading financial statements, the financial figures shown are only those that have quantifiable value. In other words, only transactions that involve money. Okay? If nothing can be assigned an accurate money price tag to it, it's not going to be recorded in a financial statement. So here's some examples. Left side, transactions that wouldn't involve money. You might be able to make an educated guess on how much it's going to cost you, but since it's not 100% accurate, you can't record it on a financial statement. So if you hire a worker, that worker might be the best worker in the world. You think that worker is going to generate you $10 million of sales. Guess what? That's not quantifiable. It doesn't have an accurate financial tag that we can assign to that, so it's not going to be recorded in a financial statement. Firing a worker. You talk with somebody on the telephone. The owner becomes sick. That's not good for the business, but you can't attach a price tag. When Steve Jobs was real ill recently, before he passed, he was very sick, battling cancer. Although that probably wasn't good for Apple, perhaps maybe they lost some sales because he wasn't around and he was sick. That's not quantifiable, so that cannot be recorded in the financial statements. Examples of things that involve money. You guys know this. You pay a worker, you pay a supplier, you buy health insurance, you receive payment. Anything that involves money is going to be recorded in a financial statement. Here's another example. BP oil spill. We all heard about it. There's 2 pictures of it. BP might have lost a lot of customer loyalty because of what they did and all the wildlife that was affected by this and the quality of the water and all that stuff. So there might be a lot of people now that maybe don't use oil from BP. That's bad for BP, correct? But that's not quantifiable. You can't attach a price tag. You might be able to estimate how many customers they lost and how much money that might impact them, but we can't be 100% certain. That's not quantifiable. It doesn't involve money, so it can't be recorded in the financial statements. However, under law, BP had to pay for all the cleanup. So the money BP had to spend to clean up the beaches, to clean up the water, to give people claims on damages that the oil spill caused, that directly involves money, cash that they lost. So that is going to be recorded in the financial statements. So again, the second assumption is called monetary unit. Now, if we go back to Nike's financial statement, now we can take a look and understand what's going on here because it's in the US dollar and written in English. So now we can go down here at the bottom. We see net income. Oh, Nike made $2.23 billion last year. They're doing pretty good. Now I can make a decision on whether or not I want to loan them money, whether or not I want to invest more money, whether or not they're paying enough taxes, because I understand the information I'm reading and I can assume that all these financial figures on this statement reported in US dollars only involve things that are quantifiable, things that I 100% know deal with money.